Welcome, 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 welcome. I think we're being streamed live. I'm so excited to be back. Those of you that missed me last week, I had so much fun. I love connecting and doing live events, which I must say we have one coming up. If you guys want to know more about the live event coming up, where we're helping you run through deals, analyze where to find the deals, and make offers inside of the live event. Sound cool? Anyway, so type live event in the comments if that's something that you're looking for. It will be a destination. I don't have all the details yet, so please don't ask just yet, but that's what I'm going to be covering, and it will be in February or early March. So as soon as we can confirm the room, then we'll let you know all the details. So type live event in the comments if that's something you're interested in, coming in live and analyzing deals and making offers and really understanding how to do real estate investing creatively. So powerful. So today we're going to be going over private money lending, and this was brought up actually by one of my clients. And so I felt it was important to share with everybody. So anyone who's considering being a private money lender, keeping yourself safe, understanding the law of private money lending, so that not just to keep you safe, well, that should just be the bottom line, right? Just to keep you safe, but also how to make money, right? Making your money work for you. There's so many things I got to say about that. If your money's sitting in the bank, you're losing money. Okay, with that being said, those of you that are new to the group here, I just want to welcome you here. We have Cindy, Becky Collins, Allison Garcia, Ellie Kern, and Linda Mobley. Welcome to the Get Started and Retire Early Through Real Estate Investing. Thank you so much for spending your time with me. You could be doing anything and you're spending it with me, and I want to give you as much value as I possibly can. With that being said, let me just get this over here. I have a few things that I want to cover. With that being said, just so that you know, if your brand spanking new here, I'm Joanna Wright, founder of Bottom Line Wealth, and I help women create wealth in real estate and keep more of the money they make so that they could retire when they desire. None of this with a ton of cash or the bank. Okay. Retiring when you desire means so that you can retire this life for the next, go follow your passions, passion or passions, whichever it is for you. And just so that you know, my youngest to retire was 28 years old. And I have trained thousands across the nation, thousands of women across the nation to jump into real estate and acquire their first property, their third property, their 10th property, and their 20th property. Like it doesn't matter where you're at. It matters where you want to go, where are you stuck, and let's get you moving forward. Okay. So in this group, just so that you guys know, little refresher for some of you that come on a regular basis and those brands making new, we cover how to get started in real estate, how to get traction, how to be creative in real estate. So it's basically beginning, intermediate, and scale. We're all in a different place. And this is kind of like your one-stop shop. I've been living off of real estate since 2000. So that's 23 years. I cover wholesale, fix and flip, buy and hold, and money lending because that's what I've done. Also some entrepreneurial skills. Being an entrepreneur is not easy. There are a lot of rocky roads that happen, but I wouldn't trade it for the world. It gives me my time freedom. I get to do what I want to do. I am not clocking in on a W-2 9-to-5 job. And I'm not in fear of my future to being fired or, like everyone I've spoken to, I think it's less now, but like when I first started, a lot of people said, I want the security of a job, so I get a paycheck every week. Honey, there's no security in any of that. There's no security in any of that. You can be fired tomorrow. So what are you going to do? Right? So I love that I get to spend my time with you and give you value and help you in your real estate endeavors. We have almost 1,000 people in this group, and each one of you have something different that you want to do. I want to make sure that I address the questions that come in. So we see them during the week, and each Wednesday we show up here at 2:30 Eastern Standard Time to answer those questions, sometimes live, depending on if you're here or not, if I can get the tech right or not and see the questions. But a couple of you asked questions. I believe Elise was one of them. I'm just going to address that really quick, and then we're going to dive into like an overview of private money lending, how it works, and all the different aspects of it. So first of all, there's a question from Elise. How do you know when to pull the trigger to make an offer? And that is a great question. So the very first thing I'm going to say to you is, so I train my clients to be making 3 to 4 offers a week. 3 to 4 offers a week. Okay. So the trigger to making those offers is seeing, first of all, we grab really quickly at a glance, does this look like a deal? And this is what I train my clients to do. Does it look like something that I want to lend on? Or I'm sorry, I'm in a private money lending mode that I want to purchase, right? And it could be, based on, I go over the different ways to find deals, knowing your market, knowing your motivated seller, what's your exit strategy, all of those things. And when you're analyzing the deal, you want to make sure it's in your area where you can handle it, right? Are you going to be able to handle it, or who are you going to have handling it? So if you have some of those things in place already, now it just boils down to, does the deal make sense? Okay. Is the rent, the bottom line here, is the rent going to cover all expenses? And that means the note that you have on it, property management, property taxes, all of the things that encumber, what repairs is it going to need? Okay. So does all of this come together? Now, you don't have to have all the details ready right out of the gate, but you could look at it briefly and understand a few things within a few seconds to know if you want to deep dive into it. Then you deep dive a little bit further into it, and then you're like, okay, this looks like I could potentially cash flow on this deal if you're going to buy and hold, right? And if you're going to wholesale, does this look like it needs a lot of work? And is there a big enough margin? Okay, is there a big enough margin to pass on to the fix and flipper? All right, if you're a fix and flipper, obviously you're the person in the middle of those two, that is there that margin that you're going to make? Okay, so now, so that's the second thing. You have that brief look, and then you have somewhat of an idea of what repairs are needed and what you're going to do with this house. So now we're talking to the seller, and we need to know, or you make the call to the seller or the realtor, whichever it is you're leveraging, and get the story of the seller. Why are they selling? And sometimes it's really not the first 2 or 3 answers. So we kind of have to retract back around as to why they're selling. And knowing the history. There's so much data that goes into what you're looking at, right? And maybe I can make a cheat sheet of all the things to look at. Let me know if cheat sheet in there would be great for you. Just type cheat sheet inside of the chat so that I can get that to you. But basically going over all of those different things to then making a educated decision. And sometimes when you get good at this, sometimes it happens in minutes. And then when you're just getting started, sometimes it takes a few hours to analyze this, but it shouldn't take you that much longer. If you're spending more than a few hours trying to get all the data together, you're missing something. Okay, so just to make this a little bit shorter of an answer, when all of that makes sense, pull the trigger. That's when you do that. Okay, so pull the trigger when the data makes sense, and the cash, the rent is going to cover all expenses needed. Okay, so, and then Ann Lee, hopefully that's helpful. Let me know, Elise, in the comments if that's helpful for you. Let me see if I can see that. Let me see if I can see that. I hear me though. Elise says cheat sheet, right on. I can enter from the VIP room link. No, so there's no VIP link here. We're just doing a Facebook Live. Okay, so I believe Ann Lee had asked about interest rate, and it's sort of a vague statement there, so I'm just going to answer a couple of different ways. A good home interest rate right now is around 8%. It's gone up quite a bit for a 30-year fixed, and it looks like I haven't heard anything back from the feds. They just recently did, I think a week ago, raised it up again, but we're on hold for now. So I think they're steady now. They feel like they're a little steady with the economy. But anything could change. We're going into an election year, 2024, and everything's going to be a hot mess on purpose. Just know it's on purpose. And so it's going to look crazy, but it's okay. Right now it's at 8%. Just know that, it's still under like 18% what it was at one point. So I know you guys are used to having such low rates. We went down so low. It was just ridiculous, historical, but it's not normal. We're getting back to normal. So it's okay. It's all good. So just know we're on hold for that. So just briefly about private money lending. So I want to go over secured versus unsecured notes, the benefits of being a private money lender, and the difference between a promissory note and a mortgage. Okay, so I had a client I was reviewing this with, and I just want to make it clear to everybody. I thought it would be supportive for you guys to hear the difference in how to do this. Okay, let me see if I have any questions in here. Makes sense, she says. Good. Cheat sheet. Property that I saw today, but I may want to make an offer. Not exactly sure how to structure it. You're going to know how to structure it, Elise, by the story. That's typically what leads that into the right place, is the story. Okay. So secured note versus non-secured notes is where we're at right now. So when you're a private money lender and you're lending on a property, know that it's typically secured by the actual property. Okay, it's secured and insured. So for my private money lenders, say whatever happens to me, it doesn't matter. Your money is in the asset, not in my pockets. There's a huge difference. Okay, so when you're doing a private money lending situation, make sure that it is secured by the actual property. Okay, and then the benefits of being a private money lender is, remember I had said earlier that if your money's sitting in the bank, you're losing money. So what interest, just so that you guys can figure this out for yourselves, ask yourself, what interest am I seeing in my checking account, my savings account, my CD, my whatever, wherever you have it held? Okay, what interest rate am I receiving? What is the cost of inflation? Over 6%. Okay, so if you're getting over 6-7%, you might be okay, which is never a checking account or a savings account. Okay, so if it's sitting in the bank, you're losing money. If it's sitting in a jar in your backyard in the dirt, you're losing money. Okay, you got to put your money to work, and that's what a private money lender is. It's putting their money to work. And as savvy real estate investors, we lend on each other's properties because we know our money is going to work. It's not sitting here. So if I take all cash, if I take 100 grand and I put it in a property, it's sitting there in jail. I can't touch it. It may or may not grow because you would be banking on appreciation. And I do not teach my clients to bank on appreciation. Does real estate historically go up? Yes, absolutely. But timely, if you need it within some odd months, it may not be. So you'll have to wait for it to come back up again. So hopefully you get my drift on that. And that securing it against the property is key. And then knowing the highs and the risks associated with it, that all of this will be listed out inside of your mortgage, not necessarily the promise note, which we'll go over, okay? But know that you'll be losing money if your money's just sitting there, or you think you need all cash to do real estate investing. So that's why I train on how to invest in real estate without the bank or a ton of cash, okay? Because if you have a ton of cash, you should be putting it to work on someone else's property. And I know this is hard for some of you to grasp, but it's going to work, right? Like you can put a portion inside of what you're doing, but make sure that if you're going to do repairs or whatever. So I have not used traditional banking or, and I don't use my own, no money out of pocket. It is typically covered by the property. The real estate pays for itself, right? And that could be private money lenders on it, hard money lenders on it. It could be seller financing. It could be subject. All these things can take over where all the money is needed, right? And all of them get the interest paid or get the money working, all right? And I would rather pay a seller or private money lender as a bank, because now you're making money instead of the bank. Why would I want to give the bank more money? They make enough money. And I would like to bring the community up, bring people up to creating their own bank. All right. So that's a training for another story, a story for another training. How's that? But being secured against the property is what you want in that note. So unsecured, okay, so you have you go through escrow and you secure it against, and you record it, and you get a mortgage at the end of it, right? So there's a promissory note, which we'll discuss. It turns into a mortgage, and then you close escrow, and now it's on title that you're the mortgage person, just like Wells Fargo would be on that property. Okay, so hopefully you got that part of it. The unsecured private money lender, and I have those two. I have secured money lenders and I have unsecured money lenders. And they're fine with it because I asked them, when would you like to stop receiving a check? And they're like, okay, well, like never. So I have a few private money lenders that are unsecured, but they get through my business, again, not even through me, but through my business, it's automated and it goes directly to them. Each month they get paid. Okay. Being a private money lender on like a larger, so that's single family that we typically do here. In multifamily, you're usually part of a PPM, a private placement memorandum, and you get a dividend. Okay, which I'm not going to get into today, but those are the three different types, if you will. I was only going to cover two, but that's the three different types. Okay. When would you want to be a private money lender? Okay. When you want your money to go to work, when you want passive income, when you have money just sitting there and it's not going to work and you're losing money because inflation is high. All right. So, I'll give you one scenario in that. So I have a private money lender in California, and she's Hispanic. And I don't know if you guys know this, but a lot of Hispanic like don't want their money in the bank, so they keep it out of the bank. And I can't blame them. And I said, you're still losing money because there's no interest that's gathering on that money. So putting, $30,000 into an investment and getting cash back, now your money's at work. So you get the principal plus interest, right? So it took a while for her to understand, but now she makes really great money. And it actually is the money that pays for her daycare. So it's pretty cool because she's still doing her job and she's doing something passively, but she's getting money that actually the note that what she receives on it pays for her daycare. So Sometimes people do real estate this big. Sometimes people do real estate this big, and sometimes people do real estate this big. So it's up to you and what you want, and what you feel comfortable. And that was a first step for her, learning how money worked, doing something passively. She's a busy mom, and she was able to put her money to work and get cash flow. So anyway, so that's an example of being a money lender and why you would want to do it. And then the difference between a promissory note and a mortgage. So a promissory note is just to lay the law of the land, if you will, of what's going to happen. It's a document of our conversation. All right. Not all the legalities are in the promissory note. All right. Not all the legalities are in the promissory note. All the legalities are in the mortgage. However, there's parts of it that overlap. And what you want to know is, where is the money going? How is it secured? And what am I getting out of it? Right? Those things need to be disclosed inside of the promissory note. Okay. And then, and what if there's a default? What if something happens? Right? So understand that that should be in the promissory note. All the details of that. So that's just like a 30,000 foot view of what's going to happen. You agree upon it. Then you go to escrow, title and escrow, and you record it against the property. The mortgage is then issued. And the reason we do the promissory note, because most of what's in the mortgage, you don't see until you're done, right? So you'll want to review that. You'll want some sort of caption of how that works and a promise of money in the first place. Okay, so the mortgage, when you leave the escrow company, and again, when it's secured, you're going to go through escrow and title so that you're on the title as a lender. So you'll be addressed if anything happens to that property. And you're not just handing over a check. Either way, whether it's a secured or insecure or unsecured private money lending situation, you still get a promissory note. It's just the directions. The promissory note is the directions of the conversation you've had. Okay, so all the legalities, everything's going to be balled up inside of the mortgage agreement, all the details. You can have your attorney look it over. That's always good to do. Most attorneys, if they get the mortgage or the promissory note in front of them, they review it and make their markings according to your wishes and legalities. But it's good if you do it from scratch. So don't let an attorney talk you in. What I'm trying to say is don't let an attorney talk you into you needing their real estate package. You don't need that. So you need a typical promissory note. You could literally pick it off of the web, promissory note, type up a mortgage. You can get those off of the internet as well for free, right? For free. And I say that because the bottom line is you'll have an attorney review it. So don't take it and just use that. You don't know if it's good or not. Have it reviewed by an expert, have it reviewed by an attorney. And so it costs less, instead of sending $1,500 to an attorney, you're spending like $200 to $500. All right. So hopefully that helps you in the differences between, or why you want to be a private money lender, the differences between a promissory note and a mortgage, and then why you would want to do it in the first place. Okay, so if you have any questions, go ahead and type them in the comments. Let me know. Happy to run them over. Marjorie says, appreciate you with that. Absolutely. Marjorie says, cheat sheet. Absolutely, you got it. Yes, yes. Okay, so any questions whatsoever about private money lending? That is just like a brief overview. We only have a short window for me to go over all the different things that I want to cover that I teach my students. I will be here each Wednesday at 2:30 Eastern Standard Time. Okay, I understand why you would want to be a money lender, but I still have questions. Yeah, absolutely. Go ahead and type them in the comments. Do you wire funds or check? So Great question, Trisha. So when you're wiring funds, it's to the escrow company and per the escrow company's instructions, not the investor. Okay? About using one. Okay. Is that helpful, Trisha? And Elise says, you have questions about using one. Yes, thank you, she says. Why would you want to pay interest? Because your money's growing. Elise, your money is growing. Okay, you want to use a private money lender because your money is growing. Okay, if you're holding on to it to the bank, you're losing money. You're absolutely losing money because interest is higher than what you're getting. The inflation is higher than the interest that you're getting on whatever account you're in. Okay, and in most circumstances in retirement accounts, you're not getting the return that you're looking for, even in a 401k, your IRA, whatever retirement account you have, a CD, maybe if you're lucky, you get 44% on the CD. So what I'm saying is if you're lending it out right now, like at 10%, you can't get that anywhere else in what a financial advisor would advise you on. So typically a financial advisor, if you're speaking to one, they're going to lead you into doing stocks and bonds and stuff and mutual funds. That's not the only way to make money. The more secure way to make money, because if you've seen retirement accounts get whacked in half because the stock market fell, right? It's safe in an asset. Even if the market falls in real estate and it dips down, it's still secured by the asset. It's just going to take a little longer to come back up and for you to get your money back. If you watch the history of real estate, it goes like this. If you watch the history of the stock market, it does the same thing. However, it's gone. It doesn't come back. It's not still there inside of an asset. So that's a huge difference between the stock market and real estate, something that's tangible. Okay. What if you don't have good credit? Credit has nothing to do with it. Credit has nothing to do with it. How much money should you have to start lending money? Actually, Marjorie, you don't need any money. Here's the thing. You could actually be the middleman that helps people to gather their money. And then you're like the broker in between that goes and talks to investors and says, I have this amount of money to lend. So you could be as little as $2,000 to be a private money lender. And I've used a private money lender for $2,000. It was an earnest money deposit, right? It's an earnest money deposit. I did that in a multi-million-dollar multifamily commercial deal. And we put down $2,000, which is nothing. And typically in my single family, I could do 5, 10, and $20 earnest money deposit. I think I've gone as high as 500 in my earnest money deposits. I don't care what the price is of the property. So don't let no realtor say you need 1 to 2%. It's just not true. They just made it up because people ask them all the time. So they just made something. Oh, did I get? Okay, I'm here. Oh, it's telling me I wasn't here. Okay, phew. Okay, well, they charge you higher interest. Who? Great point. So Trisha says, win for both. Sometimes you don't have to have the funds to complete a deal without a private money lender that you could do really with when you have money not working. It's just setting. Okay, win for both. Yes, it is a win for both. So now the investor that is used to turning property, that is used to, has the experience, and then the person who doesn't have the time but has the cash can marry up and support each other. It happens all day long, right? So you could put your money to work and go make more money in your spare time while you're with your kids or with your family, or just taking a vacation and your money's working for you while you're out. Okay. Super. Okay, Elise says, will they charge you higher interest? So I don't know who they Okay, will they charge? For what and who? And that's not clear for me. How do you show proof of funds with a cash offer if it's someone else's cash? So you shouldn't have to show proof of funds. You should not have to show proof of funds. All right. So how I teach my clients to move forward is they do not need cash. They do not need to be qualified with the bank. They do not need proof of funds. They do not need a realtor. They do not need all of the things that are tradition to real estate. Can you use them? Absolutely. Sometimes people use realtors to leverage. Sometimes people use private money lenders to do proof of funds. Sometimes, you know, like all of those things can happen, but you don't need them, just so that you know. Okay. Love the blue nail polish. Thank you, Marjorie. Thank you. Still have to drive. I got you. I got you. I like the vacation talk. Yes, absolutely. So I hope this has been beneficial to you guys. Give me your key takeaways. If you could comment in there and give me your key takeaways from today's talk. I could bring more to the table the more I hear from you. We're here every day or every week, 2:30 Eastern Standard Time, so that we get to learn and move the boat forward, right? Like, how fast can we make the boat move? That's actually a quote from Dan Sullivan, The Gap and the Gain. If you guys haven't read it, I wish you guys the reading power to go through Dan Sullivan's Gap and the Gain. It's how to make the boat move faster. And a quick example about dieting even, and I've just posted I lost 30 pounds. So you look at a cupcake and go, is that going to make it go faster or slower? And like, you already know the answer, so you don't need it. So that's what I'm going through right now. And it's been quite the journey. And with The Gap and the Gain, the book, it's really helped me to apply this in multiple places of my life. So I encourage you to read that book from Dan Sullivan. Cole, hey, Cole, nice to see you. You are the broker between the lenders and the borrowers. Where's the cash held? Escrow. Yeah, everything's held in escrow. We don't do anything without escrow. So good point. Yes. Lenders and the borrowers. Yeah, I got that. Also wondering about being a private money broker. Yeah, you could be that as well. Again, you can that book. I still need to read it. Yes, yes, it's a beautiful book. Everyone, I encourage everyone to read Gap and the Gain by Dan Sullivan. So yes, if you are just like a realtor, right? And Elise, I know you're a realtor. So you connect to buyers and sellers, right? And you get a fee for it. You can connect private money lenders and investors and get a fee for it. Okay, same thing. Maybe you could wrap your head around it by saying wholesaling, right? Anyone knows what wholesale is? It's buying at a discount and selling at a discount to an end buyer, to a fix and flipper or a landlord. And then you get a fee for doing that. Okay, same thing with brokering money. You get a fee for doing that. And again, you can only do it to a certain level because there's SEC law, okay, Security Exchange Commission law. If you're handling other people's money, it's got to be secured. All right. And the introduction could be a fee. You're not holding the money. You're not touching the money. So as soon as you touch money, you're an SEC law. So you need to manage that appropriately. So if you need to look at SEC law, talk to an attorney when you're doing that type of brokering. But a typical onesie twosie, if you're like, hey, you know, here's Bob, you know, he's got 200 grand, and here's Cindy, and she's got this property, and you could marry the two, that's a fee. So you could broker that over. So hopefully that makes sense. That's very in short, very in short. Okay. So either way you want to put it, a fee or a percentage. So some people work as a fee. They get a flat fee for brokering money. And then, so as a hard money lender, which you are not because you're not lending the money yourself, you know, that's like a percentage of and plus 2 points and plus 4 points. But I don't like to touch the hard money world as much as possible because it doesn't always make sense. We want to make as much sense as we can for each investment, for each private money lender, for each investor, for each realtor, for each person out there. It needs to be a win-win for everybody. So no gouging, none of that stuff. Just a way to be able to create community, create a collaborative event, and everybody gets a little something from it. So it's a win-win-win all the way around the table. That's how we like to work here. Cole says, perfect. Thank you. Yes, you're welcome. Super. Well, I'm going to cut you guys loose here. Hopefully you guys got some value. Go ahead and type your ahas, your takeaways that you're going to do from this training. And I look forward to future questions from you for next week. All right. You guys have a beautiful one. Bye.